Good evening, ladies and gentlemen. This is Clueless 8, and this is the weekend report for the shortened week ending, Thanksgiving week ending November 27th, 2015. Today is Sunday, November 29th, and we are about to prepare for what I believe to be a rather a very important few couple of weeks that's coming up, and of course the end of the month, wrapping up on November 30th, which would be tomorrow. So let me start off by going over a few comments and observations. We have a very critical meeting that's coming out, probably one of the more historic meetings that's going to coming up on December 16th, approximately 2 weeks from now, a little bit more than 2 weeks from now, and that is the Fed meeting where they will decide whether to raise rates for the first time in many, many, many years, or whether they're going to pass the baton on for January of 2016. We'll see. This particular week alone, we have a slew of powerful numbers, and what I'm going to do to facilitate this video cast is grab this into the screen. Bear with me 1 second, and that would be the economic calendar. Just wanna. There we go. Sorry about the slight delay. So just going to walk people through, and I think a visual commentary and an audio commentary is so far better than just putting a this piece up there with my arrows and my shaded lots of what I think are going to be market events. But a lot of these, as you can tell, if people are not used to this, and a lot of the newbies who are learning, this is econoday.com. This is the economic calendar. This is the global version. So you see a lot of, European, Swiss, British, Italian, Indian, you name it, all kinds of indicators and economic releases that's coming out. But I'm going to focus on the ones which I think are relevant to us. So to kick off, and to make good use of this time, the U.S. Chicago PMI number is very important. The pending home sales is very important. That's both coming out on Monday, 9:45, 10 a.m. The Dallas Fed manufacturing numbers are important, but not really on a priority basis, not as critical as the pending home sales and the Chicago PMI. U.S. farm price is not that important. You have the China manufacturing PMI, which is coming out at 8 p.m. on Monday. So that's a very critical number. I know we jump around like monkeys on a hot tin roof every time any Chinese number comes out. The fact remains that markets do initially react to it, and then they pass on because they believe China is going to move. China is going to do whatever it takes, and when China says whatever it takes, they mean it. To make sure that their economy is not in a tailspin and that they keep up with the so-called 7% annualized growth rate that the Chinese leaders have, and the PBOC, that's the People's Bank of China, have reiterated many times officially. So I think they're going to keep up with that. So regardless of that, even if we see a dip, generally it gets bought unless the number is that horrific, in which case we'll see what happens. So you have the Chinese PMI manufacturing index here. You have the PMI, that's the Purchasing Managers Index. Gives you a nice little brief overlook into the inflationary numbers, and then you have what do you call? Anyway, so then you have this I think is the most important one. So that's all coming out after the market on Monday. On Tuesday, we kick off. We have U.S. motor vehicle sales. It's important. Gross domestic product. No, that's not ours. So we scroll down here. We have this is important. That's the German PMI manufacturing index. Purchasing managers that give you a little gauge into what's happening on the industrial side, what the purchasing managers are looking at, and what they're feeling. Then you go ahead and start the day off with us with the U.S. PMI manufacturing index at 945. Then you have the construction spending. That's very important. So you get that done with on Tuesday. So I'm just scrolling through really quickly. Okay, mortgage applications at 7 a.m. pre-market on Wednesday, very important. Wednesday, we also start off with the Federal Reserve. We also have Janet Yellen speaking. I don't need to remind anyone how important that is. Every word out of her mouth, every ring, every movement that she makes with her hands, and how she reacts to as she's speaking is going to be scrutinized. So it's a very critical one. That's at 12:25 p.m. U.S. productivity costs and stuff are important. ADP employment report is important. If it's a very strong report, markets are pretty much at this point pretty sure that they're going to raise rates in mid-December. If that ADP number comes out rather weak, then obviously that throws a little wrench in the picture. But we'll see. We'll see what happens. Um, then we have the beige book right after Janet at 2. So this particular zone here on Wednesday is what I call a volatility cluster. Okay, that's when it's going to get pretty volatile. So if we're up a lot, you can make sure that then you take your profits off the table. And if we're down quite a bit, then just being somewhat of a contrarian, looking at many different technical indicators. If we're very oversold or something prior to Wednesday, then obviously it's a buying opportunity before Yellen speaks. Um, so it all depends on where the market is. Remember, it's not what happens out there, what the news is, or who says what. It's a reaction of the market. So the markets, if they're technically deeply oversold and other technical indicators are showing that we are due for a bounce, then obviously you're in for a sharp, quick bounce. However, if we are up a lot and the indicators are overbought in all the different parameters that I show, then obviously it makes sense, logical sense, to take a good deal of the profits off the table. Okay, Thursday we have the Challenger job cuts report, so that's important. Jobless claims is important. PMI services number is very important. Bloomberg Consumer Comfort, no one really cares about it. And again, Janet Yellen speaks. That's at 10 a.m. Right after that are factory orders. So here's another big volatility cluster. No question about it. Okay. So it doesn't mean good or bad. I'm just giving you an idea that those are the points where these algos are going to go haywire, and they're going to do whatever it takes to make sure that your profits are taken away from you if you're snoozing. So just be at the machines, and you just got to do what you need to do at that point. And I'm there to obviously provide as much guidance as possible through my charts, through my comments, and through the trade alerts, and we'll go from there. Then we go on Friday. We have the all important U.S. jobs number. That's a critical number, and that's why this week is very important, because this number will pretty much determine whether or not the Fed's going to raise rates. Now, I do believe that it's not just the numbers that they're looking at, right? I mean, they're looking at a lot of stuff here. So they're looking at the national scenario. They're looking at a whole bunch of other a slew of other different variables. So this number is important. Just if you look at a binary factor, whether or not it's good or bad, if it's a strong number at around 200,000 or higher, then obviously you're going to see the market be fully convinced that the rate hike is coming 12 days from now, which is December 16th at the Fed meeting. Okay, so we'll see what happens. The Baker counts. This is for all the oil players, the USO players, and the UWTIs and the DWTIs. The rig count, the Baker Hughes rig count. The last one was down sharply, but oil is very, very tricky. It's moving in a band, so it's okay. It's trading between 42 and 44, or 40 to 43. So it all depends on where you're placing yourself. So that's it for the economic stuff, right? Just wanted to give you all a quick heads up, and I'm going to close this window out. Another thing I want to show is this. Now this is interesting. I've tracked it for many years, and again, it's one of the things that I look at, and this is a Ticker Sense, which is run by Laszlo Barini, and this is the free version, so you can take a look at it. And the poll, which I find interesting, bloggers, which includes newsletters. So all these different newsletters, all the gurus in the market, a couple of them I quickly read, and you know what? There are a lot of smart people out there. They play all with their cognitive biases. In other words, they're all politically inclined to be bearish or bullish, right? So sometimes they get uber bearish, sometimes they get uber bullish. But A lot of smart people. All right. So the bottom line is, and you're wondering, why isn't Clueless a trading newsletter a service in there? Because I don't want to be. Because I'd like to, my whole mission statement is to stay somewhat incognito, serve my members and free trial subscribers, get a large number of followers, but not go out there in the public eye too much. Because once you get mixed in with the so-called uh, so-called public persona, I think you lose your sort of edge. So I like to keep my edge. And so anyway, some of these newsletters I know quite well. And anyway, so this is what they do. So they do a survey, and one of the simplest ways to read this, and if you notice, you got a 44% bearish sentiment. That's a pretty high number. Okay, when that number goes below, let's say 20%, and this number goes above 50%, which is the bearish number. Okay, the bullish number goes over 50 and the bearish number goes below 34, let's say, or 30%, and the neutral number, let's say, stays around here. That's a dangerous sign, because that means a lot of these newsletters are getting very bullish, which they're not at this point. I'm giving you the reverse picture, the inverse picture. But at this point, you only got 32% bullish. I'd like to see it less than 30%, to be honest with you. That almost assures a quick, sharp rally, okay, in the markets, because contrarian methodology of thinking. And if the bearish percentage goes over 50%, wham bang, there is, I mean, within a matter of days, you get a powerful reflex bounce. Now, generally, the bearish sentiment goes over 50% or so when the markets are crashing. Okay, when the markets are crashing, that's when you get it. So when you got there on August 24th, the big huge flash crash, you got down to September 29th lows. These numbers were significantly higher. There were very few bulls left, and of course the few voices, specifically on my service included, Clueless Day Trading. We stuck to our guns. We looked at the technicals. We said these were one of the most powerful buying opportunities, and we went in there. Okay, so this is a quick one to look at. It's free. You can type it in, bookmark it, and take a look at it. So that's good. The third one I'm going to quickly look at. I got 3 minutes on this video cast, and I'm going to do another one on the algo charts. So the other one that I was looking at is this. This is also from stock charts, all free. It's your bullish percentage index. Okay, so when you look at the bullish percentage index, you are looking at a number right now, which is at around 68, right there. Okay, right there. So if you look at these Bollingers, which I put, these things I transpose on it just to get a range, get an idea of where I sit within the range. You're going to notice that the Bollingers here and the Bollingers there are getting very pinched. You know what that means? There's a big move coming. Now, the big move can be down, the big move can be up. We don't know yet exactly. My gut tells me that at least for the first 5 to 7 days of the new month, as I've said always, and I've been right almost 90% of the time, if the huge billions of dollars of inflow come in from pension funds, institutional funds, and which are mandated by law to put money into the market. Given where we are right now and the market behaving well lately, I expect that we at least get up towards the upper end of the range, in which case the RSI gets overbought. Remember, the RSI got very heavily overbought here in the 90s, and then we pull back. See the pullback, right? And then we started to move up again. So as we started to move up, I believe that we do go into the green here on the RSI. So if that brings us up, let's say close to 90, now we are at 66.50 and we get into the green zone again. Rule of the thumb, you gotta take a chunk of your profits off the table, because that's deep overbought positions, and that's the way it is. You want to sell. So anyway, at this point, I think we have a little room to move higher, and I've showed that on my charts, and we'll go from there. So this ends this part of the video cast. I'm going to go into the algo charts on the next one. I hope this was helpful. Thank you for listening.